Back for another edition of the Twin Cities Real Estate Pros podcast. Thanks for joining us as always. Coming to you this week from our Lakeville office. My name is Ron Johnson, licensed real estate agent with RE/MAX Advantage Plus. This is David Nelson, licensed real estate agent with RE/MAX Advantage Plus. And we have Jeff Anderson is here. He is with Summit Mortgage. We're going to get into actually something that's really important as far as there being no inventory on the market, a way to help create inventory. Also an option for buyers who maybe that perfect house isn't there, but you find the neighborhood. Some options they can do there with rehab loans for both conventional and FHA. So we're going to talk a little bit about that as well. If you're new to the program, we are online at TwinCitiesRealEstatePros.com. We're also live on our Facebook page over there at Imperial Home Team. Later on, we will have the episode on YouTube at our YouTube channel at ImperialHomeTeam.tv. Also, the audio version is on SoundCloud, and all of those things can be found on the website, TwinCitiesRealEstatePros.com. We like to talk about things in the real estate market throughout the Twin Cities. We are here in Lakeville, but cover the entire Twin Cities metro area, as I come from the Golden Valley area and western suburbs and in Minneapolis, and David likes to stay down here in Lakeville and doesn't ever leave. Yeah, unless he's going to a football game, then he'll leave and go to Nebraska. But so that's kind of what the story is here for the show. And usually we like to talk about some of our pre-listings and things we have. And I know me personally, I've got 3 listings that are all sold, pending right now, so I don't have a whole lot to talk about as far as what's coming up, which is a good problem to have. And I think you're kind of in a similar boat as well.
Yeah, I've had a closing this morning, which is Tuesday, and I have another one on Thursday. And that's kind of the inventory right now. It's a lot of people rumbling and grumbling about listing their house, but nothing really on the books right now.
Yep.
And that's the time of the year. It's Thanksgiving's coming up next week, and then you've got Christmas and New Year's, so it's typically a lull just in the whole market.
Yeah, I do expect to have one coming up in Prior Lake, 4 bedrooms, 3 bathrooms, a 4-level split. Don't have all the details yet as far as what we're going to list it at and when exactly it's going to come on the market. So I do have one in Prior Lake if you're looking for 4 bedrooms, 3 bathrooms. That one hopefully will be on in the next week or so, a couple weeks or so, I should say. But I've been saying that for a couple of months with this particular house. But I talked to the sellers today, and they said, okay, now we're going to get everything done, get our pictures taken, and be ready to go on the market. So hopefully I'll have one in Prior Lake. Other than that, yeah, I've had one in Hopkins that sold in about 3 weeks, I think it was. We're closing on that at the end of November. Had one in Northeast Minneapolis that was on the market for about 13 days, I think, before we got multiple offers. And then another one in New Hope was on for 5 days before we got that one sold. So people are buying and selling homes in the fall. So good to hear about that.
Yeah, you can hear me better now.
Yeah, we'll hear you better once you plug your mic in. But so, yeah, let's talk about why we have Jeff here. So we appreciate you coming in to join us.
Thanks for having me.
And I guess give us some background a little. We're going to talk about some of the conventional product, the rehab product, conventional and FHA. But I thought it was really interesting what we had talked about earlier today is kind of why reacting to the market, which is smart business, right? So,
well, I had one good idea once, so that was good.
Yeah. Or I keep saying conventional, why the rehab products are a good option. And not just for buyers, but also for a seller, too. That's a good product because then if they've got a house to sell, it can kind of make it a little better and expand the market a little bit.
Sure. And as we were talking about earlier, back in 2008, when everything was, 75% of the listings and everything were bank-owned properties, you just couldn't find financing options for the houses and the conditions that they were in. They're missing kitchens and bathrooms and windows broken and that type of stuff, and they just weren't going to go traditional financing. So at that point in time is when I really dug into there has to be something out there for us to be able to do. Dug into the 203ks, researched it, made sure we had servicers for it, and really just kicked it off and started getting the word out that, hey, if you want to buy this distressed house, here's how to be able to do it, and it's been great, and it's really been able to get people in. Actually, one of our best stories was a house here in Lakeville, and on one of the flyers here is actually the kitchen on a house in Lakeville, bought right at the, obviously worst time for sellers, but best time for buyers, and they put $35,000 into this house in Lakeville, and at that, even at the worst market, the appraiser couldn't get it down to where it was at. Purchase price, rehab, and that type of stuff. I mean, it appraised for $235,000 or something, but after rehab and purchase and everything was in it for like $185,000.
Wow.
It was just unbelievable, and now it's probably worth $330,000. So So yeah, it's been exciting for people, and really the big trend that we're seeing right now is because, as you guys know, there's not as many bank-owned properties out there. So what we're seeing a lot more of now is original sellers. I've had more closings with sellers that are 85 years old and built the house in 1958 and that type of stuff. And for the most part, they probably haven't done anything to it in the last 20 years. And so a lot of the stuff that we're seeing now is yeah, it could pass FHA, and yeah, it could pass conventional and that type of stuff, but now they're going to be sticking 20, 25, 30 grand into updates. And first-time home buyers, they just don't have that kind of money sitting around. Do a 5% down, and then all of a sudden try and spend another 30 grand in rehab to bring it up to what you want is tough. Without making bad financial decisions and having a 10 grand credit card at Home Depot and that type of stuff. So here's an opportunity to get it all done, one loan, build it all in, and really gives them an opportunity to make their house a home. So
I think I read somewhere too that's like less than 5% of deals now are bank owned.
I would probably agree with that.
So
yeah.
you can, like you said, considering 5, 6, 7 years ago, at least 50%, if not more, were involved with bank loans. So yeah, and kind of going on what you talked about, that I sold a house over the summer that was original homeowners, lived in it forever. They got top dollar for it, but the people that bought it had to put in quite a substantial amount of money to update it. It had the laminate countertops, the beat up linoleum. So it's luckily the people that bought it had the money, but it limited the amount of buyers we had because they knew, thanks to HGTV and everything else, they expect to walk in and see granite and everything else, but they saw chipped laminate. Yeah. And but it's sold. But again, that people bringing the cash to the table is hard to do.
Right. And the nice part about this product is that it's not it's not a do-it-yourselfer. So it's not, hey, we're going to give you 20 grand and you do whatever you want. We do need a bid from a licensed general contractor for whatever you want to do. You can choose whoever that is, and as long as they're licensed with the state of Minnesota, we're good. From that standpoint there, and we really try and make the process as easy as possible. I deal directly with the contractor. Once we have that bid from the contractor, I'm going to contact them, get whatever I need from them, because we get their insurance and we verify license and, get their W-9s for their taxes and everything. I take care of all that for the client, so they're not trying to get that directly from the contractor. And the loan itself, then you just, it's all one loan. So it's not a first and a second mortgage, and which we all learned over the foreclosure days, is that a second mortgage doesn't go away with a foreclosure. So if something ever happened, that thing's still out there and, it's with you until it's paid off. So it's nice. It's a first one loan. Example I always use, let's say you're buying a house for $100,000 and you want to put $20,000 into it. Well, now on our paperwork, that total becomes $120,000. For you guys, you're still writing up the purchase agreement, $100,000. Sale price, 3%, seller paid closing costs, whatever the case may be. Nothing really changes for you guys other than we'll say a lot of times, but if you check the FHA box, just go ahead and write next to it 203k, somewhere on there. My pre-approval letter is always going to say 203k Rehab loan on it and that type of stuff as well. But it's all one loan. So now it's 3.5% down of $120,000 plus any closing costs that the sellers don't cover, and you're good to go. On the limited FHA product, which is up to $35,000 in repairs, we're going to disperse 50% of the bid the day of closing to the contractor. If it's a real big project and it goes over 35 and it becomes a standard 203k loan, there's nothing dispersed at closing. So there's the importance of having a good financially stable contractor where you don't have, they're not pounding on your door looking for money right away, because it's all done based on completion and a draw process, very similar to a construction loan, where it's set up with an FHA consultant and it's going to be, laid out to, you finish this, you get 20 grand, you finish this, you get 20 grand, you finish this, you get the rest. So it's very important to have that quality contractor to make sure that everybody's on the same page. And we reach out to the contractors to let them know, how that works, so that we don't want to put anybody in a bad situation either.
How about timeline? People will go into houses, people, and they want to knock out walls and do all this kind of stuff. You actually have to have time to do that.
Correct.
Now, with these products, is there a limit? You can't just go forever. At some point, there has to be, 6 months.
6 months is what we're looking for there. And, 90% of the loans that we do on the rehab stuff is going to be the limited 203k. It's going to be the updates. It's not going to be knocking out, we'll do probably 2-3 of those where it's a good $70,000, $80,000 project a year. But the majority of it is going to be the update in the kitchen, new countertops, new flooring, doing a bathroom, maybe finishing a basement, something of that nature there, adding square footage. And so, honestly, most of the time we see them done in 35, 45 days, and everybody's done and out. Wow. So, yeah, it's very, very, very slick process. And it's nice for the contractors, too, because it's guaranteed money. We're holding it in escrow until the work is complete, whether it's 50% or, upon completion and that type of stuff. And I'm sure there's plenty of contractors out there that haven't got paid on a deal, so even though contractors are very busy these days, they're still going to jump on that aspect of it because it's guaranteed money. We know it's financed. They know they're going to get paid. So,
in your example of the $120,000, so as a buyer, they need to sit down with you and get approved for the $120,000.
Correct.
So they need to understand when they're looking at purchase prices.
Yep.
And the money they are going to put in, that all goes into the pre-approval amount.
Yep, absolutely. So whenever I pre-approve somebody, I always really focus on the all-in approval amount. So it's, if we have a client that's looking in that rehab price range and that type of stuff, we're going to go over saying, yep, you're approved for right around that $150, depending on property taxes and homeowners insurance, and that's all in. So if you find a house at $150, great, move-in ready, okay, fine. But if we're looking at a renovation situation and it needs $20,000 worth of work, now we need to be in that $130 purchase price to be a total of the $150.
Okay.
Yep.
And then also from reversing that out to the seller side, it's a great thing for banks. But if you've got a home, if it's you own the house that you had for the last 60 years or something like that, and you're going to struggle getting buyers, then your real estate agent maybe can hook up with someone like yourself.
Absolutely.
And use that as a marketing tool, right? So you've
Absolutely.
got your house, you've got some issues maybe for FHA, or it's not a buyer-ready house and it's in a
Yes.
first-time neighborhood. So from a marketing standpoint for a listing agent or seller, that's
Correct.
also a great tool.
Absolutely, and it really takes the pressure off of you as a seller to, if you're just not in a position to put $5,000 in to paint the exterior of the house and replace a couple of windows and that type of stuff, the deferred maintenance, it allows you to know that there's a product out there that you don't have to do that. That if the timing and everything just doesn't work out for you, we've done a lot of estate sales, something of that nature there. It's a good product to have there where, it's now ultimately a family-owned property, and, none of them want to put anything into it at that point in time. So this allows allows the listing agent for that property to say, hey, it's okay, here's a product that's going to work for this house.
And I don't know your experience, David, but a lot of times when there are the houses that they've lived in for 50 years, maybe they're outdated, but a lot of times they're solid homes.
Solid,
yes. And they're well taken care of.
Right. Absolutely.
So that definitely helps, if you just have to change out the wood paneling and whatever. And you're not
Absolutely.
And too, as as part of our job as a real estate agent, is we take our buyers around. We try to, you can't change the neighborhood, you can't change the location, so that's good. But you can always change the countertops, you can always change cabinets. But a lot of times, again, it's that HG phenomenon. You walk into a house and you think every house should be flipped and should be cheap or free.
Yeah.
And which doesn't happen.
And I agree 100%. You always joke about location. You can't recreate that.
No.
And so this gives you an opportunity where if you find the right school district and you find the right square footage and that type of stuff, great example of one we did this spring. Young family, 2 kids, I think, at that point in time, wanted to be in a certain school district, certain area, and that type of stuff. They bought a Rambler with an unfinished basement. Needed a new kitchen, finished the basement, $45,000-$50,000, I think they put into it. Egress, the whole shooting match in the basement, created legal bedrooms and stuff like that. They're going to be able to be in that house for the next 20 years.
Right.
Because it was the right situation, right location, but needed that boost to get them to meet their family needs and what they were looking for the future.
A lot of times, too, people think it's going to cost, and I'm sure you can kind of agree, too, bring a buyer through and they see a cracked light switch. Oh, that's $1,000 fix.
Right.
You're like, no, once you start kind of breaking down, I mean,
Right.
a lot of times you can put an egress window for under $2,000.
Yeah.
And all of a sudden, boom, you've got a
Legal
bedroom and another maybe $8,000 in equity.
Yeah.
So a lot of times the expenses aren't that big. So kind of going back to what you talked about earlier, no matter what you do in life, you want to have a trusted contractor.
Absolutely. Absolutely.
So when you have one that can kind of come with you, even when you're showing around houses, the contractor can come with and they can walk through the house and say, this is probably going to cost this is probably going to cost that.
Absolutely.
So we don't know what's behind the walls.
Correct. And we see that a lot where it's, clients will go out, see the properties, that type of stuff. And, if they want a quick walkthrough with a contractor, family, friend, whatever the case may be, a little peace of mind to get a ballpark, because the average person doesn't know how much changing out a light switch is, and so it's really just creating that vision to be able to say, hey, this is all doable within your price range, but this is the way that we need to go. And the sad part is that too many times buyers are limited by their financing options, and they don't want to switch lenders, or they don't, this lender doesn't do the rehab loan, and this listing agent doesn't want to pull that buyer from that loan officer and that type of stuff. And we all understand that we're not going to get every deal, and we all have time into every single situation. But ultimately speaking, you always want to do what's best for the buyer. They're the ones that are going to be there for the next 20 years and that type of stuff. And I think sometimes, unfortunately, there's too many hesitations about saying this loan is available because this person doesn't do it, and they don't want to wreck that relationship when in essence might not be best for the buyer sometimes.
Right, and I'm glad you brought that point up because I don't like to talk bad about people.
Exactly. Nor do I.
There are literally times like you'll go out to see a house and it's in a lower price point, and wherever it's located, and it's $150,000 and it looks like $150,000 house, right?
Yeah.
So, and you'll call the lender and say, hey, you know what, the buyer's FHA. Anyway, we could do an FHA 203k, and they hang up the phone or they run or block your number, essentially. But people, sometimes they're more work and whatever, but lenders, for whatever reason, are scared to do them. But they shouldn't be a scary product as long as everybody knows what's going on.
It's not.
Right.
Yep.
And it helps, like you're saying, if it's good for the buyer to get in that house, then it's a good product.
Absolutely.
But for some reason, not a lot of lenders don't like to do them.
And like you said, it is a lot of work. It's a different loan. There's limited investors. When you're dealing with a company like us, we're a correspondent lender, so we lend our own money, but we don't do the servicing on the majority of our loans, probably 20%. But so the majority of our loans, we're transferring the servicing afterwards. And there's not a lot of servicing companies that will take those. So if you make an error, you've already lent the money, and that's what lenders get scared of. You know what I mean?
You just can't say sorry.
Yeah, sorry,
Those
but
cabinets.
I want you to take this. I want you to take this anyway. So I think there's part of the hesitation on a lot of lenders as to why they don't do it. But thankfully for us, we've been doing them now for 9 years now, and it's just. It's like anything else. The more you do it, the better you are. The more streamlined you are. I mean, it's like a normal loan to me. So it just, my processor, and I mean, just everybody involved. It's a very smooth process. It's no different really for me than any other loan. So.
And I don't want to put you on the spot because we didn't talk about this earlier, but I know there are some.
But I'm
going to do it anyway.
I'll put you on the spot.
But I believe like the city of Coon Rapids has a program where if you use the 203k, they will loan you.
I actually helped design that program
there you
with
go.
Cheryl
See,
Bennett.
Not so much on the spot.
Yes.
But maybe there's some other either cities or community organizations, so you can actually get some help too if you're doing this type of program.
Yep. Brooklyn Center did. I'm not 100% update. I helped them create that with Kurt Bogan. I don't know who's all still there. Sure. That was years ago. But helped with that program. Helped Cheryl Bennett in Coon Rapids with that program, if that's still available. And it was designed, during the time where the cities had the TIF money, and it was kind of they had to use it to reinvest in their cities and that type of stuff. And so it was a great product. but it was designed to, increase the tax base and stuff for that property. Everything was falling, and it's like, well, we want to make this house better. How can we show it as a benefit to the city and that type of stuff? And it's like, well, you're increasing your tax base if the property is valued more. You're increasing the market value of that property. You're going to be able to get more taxes from that, and it's not going to be a rental. It's not going to be an investor. It's not going to be that type of a situation. Not that there's anything wrong with that, because we needed the investors to turn some of those properties and flip the properties and that type of stuff. Everybody needed it, in some circumstance to do it. But yeah, so there are some of those programs available still, kind of limited, but yeah, there are a couple of those still out there, I think.
Where those essentially give you help on the
Correct.
portion of that. If you buy the $100,000 house,
Yep.
they give you help on the 20.
Put $15,000 into it, and then you get 3.5% down payment gifted to you there in a forgivable situation.
Sure.
So,
Wow.
Yep.
Yeah. So yeah, it's another, and I'm sure another thing that people don't know about.
Yeah, and we're all, all of them, it's like anything else, and if we have time, we can touch on some of the Minnesota housing programs and that type of stuff with down payment assistance. Any down payment assistance is generally going to be income driven, based on the AMI incomes for that particular city, that particular county, however that breaks it down, based on your qualifications. So some people might qualify for it, some people don't. It's all a lot of times based on income for the household. 1-person household, 2-person, 3, 4, 5 goes up as it goes. So, but we always look into that. There's a website. I'm going to say it wrong too. It's Home Ownership Center, Minnesota Home Ownership Center.org, something like that, where you can go in, enter in a zip code, and a lot of times it will pull up if there's any assistance programs for that city, and that's the most accurate one I've seen. But I mean, for the most part, you really only have Minnesota Housing that covers everywhere other than the city programs. And with Minnesota Housing, I think they still do the 203Ks. We don't do the 203Ks through Minnesota Housing. So unless there's a city program, we would need the full down payment on that.
Sure. Yeah, we actually had Ed Nelson on from the Minnesota Housing Center, or Minnesota Home Ownership Center, and he talked about a lot about that. But yeah, let's get into Minnesota Housing.
Yeah, absolutely. Let me just jump back one thing too on the rehab topic. There is that we do have the conventional rehab product as well, and just to kind of separate the differentials between the two is that FHA. One of the big differences, FHA is a maximum loan amount of $326,600. Okay, and with any FHA product, doesn't matter how much you put down, you're still going to have that monthly mortgage insurance. Okay, so the one nice piece for maybe your step-up buyers or something of that nature there is the conventional loan through Fannie Mae, the home-style product, because that is a $417,000 maximum loan amount. And also, it follows traditional conventional guidelines where if you're putting 20% down, you don't have the monthly mortgage insurance. So if you do have that buyer who's upgrading, sold that $200,000 house and they found a $400,000 house, they've got 20% down, but it needs some work and that type of stuff. Everything works the same. Literally, home style copied FHA in the majority of their guidelines when it comes to it, even to the point of if it's over $35,000, you need to use an FHA consultant as part of the process. But it gives you that opportunity, because when you think about that, so now what's 80% $417? So I mean, you could be in a total of $540, something like that, and then do the $417 and have it all built in. You find a house that's $300,000, it needs $200,000 worth of work. You put 20% down, you're still in that area, but you didn't have that full $200,000 worth of work that house needed. You know what I mean?
Wow.
So you're putting down 20% of $500 and still have that ability to have no mortgage insurance. The rate's going to be a little bit higher on any of the renovation products, generally about 0.25% difference between a regular FHA and the 203K and a regular conventional versus a home style. Again, because of limited investors. So
okay. That's a really interesting point, though, because I think sometimes people get trapped in the idea that if it's a rehab or a FHA or any kind of loan like that, then it's got to be a cheap house.
Right.
But that's not at all
Not
true.
the case. Yeah, absolutely. So we've done one of the larger projects that we did was, we just basically set it at 417 and then worked up from there, and then they, got as much done as they could for the amount then that they had down, and it's a great product.
So essentially, you've got the cash for a down payment, but maybe not enough cash for the
whole shooting match.
Yep. Okay.
So yeah, maybe the house would pass conventional, but you've got 100 and it needs 200 worth of work. Well, now you've got the 20% down. We can get the other, factor it all in there for the total. So it's a great product for that step up buyer too, not just that $150,000 house. So
And even with, you said too, like 0.25% interest rate. I mean, the rates now are so low. I mean, granted, 0.25% on 3.5 is a big one, but still, I mean, the rates are just free money.
Oftentimes people think that a 0.25% rate is like this $300 difference in the payment, and all of a sudden you start walking them through it to say, okay, well, at 4% your rate is this, at 3.75 your payment is this, or your payment is this, and it's like, oh, that's it? First words out of their mouth.
Yes.
Because it just doesn't, we're a very rate-driven society when they kind of, obviously went down to next to nothing here several years ago. So now all of a sudden it's what's the best rate and rate. And it's like the only reason when you break down the numbers, people don't realize that it's so small when you're talking about anything that starts with a 3 or a 4 over 30-year term. And then it's like, it doesn't really matter because all you're wanting the lower rate for is to be able to say you had the lowest rate at the water cooler.
That's all your
You know what I
friends,
mean? It's just like, yeah, I got this rate. Well, that's great, but
Then you can say, hey, I had this rate, but look at this beautiful house I have. And
and they don't say,
it's your kitchen.
Yeah, but I had to pay 1% discount to get that rate. You know what I mean? And that's one thing that I always try and let people know when we are pre-approving them and that type of stuff. And a lot of first-time home buyers are tight on cash and that type of stuff. And it's like, well, instead of taking 3.5 and paying a 0.5% origination, let's take 3.625 with no origination. Now you're bringing in $800 less, and it changed your payment $12.
Yeah.
Which is easier, $12 a month or $800 right now, or getting that from mom and dad or whatever. You know what I mean? Right. So I always like to give clients more than one option to be able to kind of explain how the pricing really truly works, other than just this is your rate. So.
Right, and who knows? In the next 3 months, or whatever, who knows what those rates
absolutely
look like one way or another. And then,
and we talk about Minnesota housing. So much of that, I get invited to the meetings with Minnesota Housing and stuff when we have roundtables and everything. And one of the changes that Minnesota Housing just made because of the lending industry reaching out about it is that if you look on their website and rates now, they have 2 options for each of their loans. This rate for no origination, this rate for 1% origination, because it really affects your cash to close. And before we didn't have that option, it was this rate and 1% origination. And when they've raised their down payment stuff here recently, but earlier this spring they had to kind of reduce it. So the one loan was like $5,500 and the other loan was down to $7,500. Well, you're only going to get 3% seller paid closing costs these days. We all know that. And on a $150,000 house, if you got to charge 1% origination and everything, it just wasn't really meeting the needs of, not having that no origination option, plus reducing what you were able to get through Minnesota Housing. It was really tough to make those deals work. And the rate was a little bit higher than normal market and that type of stuff. And so Minnesota Housing did a really good job of, working that in there and opening it up a little bit to give a couple more options. And now they've increased it back to $7,500 and $10,000 as well. So the combination, now you're in real good shape. So.
I know real estate agents like to brag about how great negotiators we are, but what you're saying is that if you have a lender that's in your corner and giving you options, that's going to help your negotiations as well, especially when it comes to seller paid closing costs. Right? Because if you're in a deal where it's just really tight, a couple $100 here or there on closing costs, either you get the deal done or you don't. But if there's a lender who can say, you know what, we can, if you're okay with a buyer, we can help reduce your closing costs or whatever with other options with higher interest rates and such like that.
Absolutely, and especially right now, because I mean, how many houses are in multiple? You're just talking about one of your listings. Multiple offers, multiple. I mean, it's all day, because if it's a good house, it's going to be well priced, good area. It's going to be in multiple offers right now, because we all know there's more buyers than sellers right now. There's no doubt, and so that feeds into being able to say, okay, well, let's ask for 2% on this here, and then to try and keep it. Basically, to offset that, let's take a little bit higher rate, get rid of the 1% origination, and your out-of-pocket is still the same, and we're still going to be able to make this jive with what you have in the bank and keep your payment within what you were hoping for. So, no doubt.
And we preach, too, and maybe I just preach, but the fact of it's important to have a lender that you can actually talk to. Yeah. And if you watch TV, which a lot of people do, you see tons of ads for bigger companies that just pretty much it's a puppy mill for loans. Yeah. And again, whenever we have a lender on, I always talk about this. It's important to have someone you can sit down with. I mean, you gave us a lot of information already that a typical buyer is going to come in and they're going to feel they're not going to know this. And usually when they go to like a bigger online lender, they don't know that. They just want to get you through the process. When you have somebody that can say, hey, let's look at your finances. What county are you looking at? What city are you looking at? Are you looking to rehab, whatever? Right. To have those options that make things work compared to a yes or no, black or white kind of thing.
Right. And I think that, just like with you guys, it's a relationship. I mean, you're entering into, for lack of a better term, a marriage. You're making the biggest decision more than likely you're ever going to make. You're purchasing a home, your largest monthly payment, well, except for healthcare right now, but that's another subject. But I mean, it's your largest monthly bill, and you want to make sure that you have the best options available, and it's like anything else. You work for RE/MAX for a reason. I work for Summit for a reason. We're a largely privately held mortgage company in Minnesota. We're owned by the Carters here in Minnesota. If I have a question with underwriting, I can hop in my truck in 25 minutes and I can be eyeball to eyeball with an underwriter. You don't get that online. You don't get that through whatever spaceship mortgage or whatever you want to call it. You know what I mean?
Yeah.
And it's not a churn and burn. It's you're gonna get a text message or a phone call back from me at 8:30 at night because you're in multiple offers and you need an updated pre-approval letter to get that offer accepted when you guys are out pounding the pavement and that type of stuff. And it's not, as you know, it's not a 9-to-5 gig. And you just know that. Your wife has to know it. Your kids have to know it. And when the phone is ringing at 8:30, you need to answer it. And you need to be able to do it on a Sunday. And you need to be able to do it on a Saturday and that type of stuff. So.
And even for listings, you get multiple offers and we look at them and we see, Spaceship Mortgage comes through. And we're like, well, we know we won't be able to contact them until tomorrow or maybe Monday.
9 to 5.
And it's like am I going to talk to the person that sent the letter, or is it going to be somebody else out there? Whereas we can call you and say, hey, your buyers are on an offer. Are they good? Yep. And it kind of, it's for us as a listing agent too. It's nice to talk to somebody to reassure our sellers that yes, reputable lender, they're approved, and they didn't make that letter up on print shop. It's actually legitimate.
I have a minimum of 2 offers every month get accepted because it's my pre-approval letter. And I love it because the listing agents come to the closing and say we had multiple offers, but I know Jeff, and that's why we accepted your offer.
Yeah.
Period. You're welcome, Kale. Because I just had 2 with Kale. But I mean, that really speaks volumes because they know Summit. Been around since 1992, so if you've been around since 92 in the lending industry, probably did okay and made good decisions, and that's why you're still around, And so you just can't, you talk about local and stuff, and there's something to be said for that, and it's going to give peace of mind to the listing agents when you're putting in the offers. It's going to put peace of mind for you guys knowing that Jeff says it's going to close, it's going to close. This is where we need to be at. this is the parameters we need to be in. But the good news is, because Jeff does the rehab loans, we can look at any houses. We're not limited to things that only say
Right.
FHA, VA, conventional in the comments. We can look at stuff that says cash or conventional. And then it's a matter of conveying to the listing agents that, hey, this guy does it all the time. It's okay. You know, we're going to be able to close on this. You know?
He didn't take an online class
Right.
10 minutes ago.
Right.
Google how to do a 203.
You know, and thankfully, generally speaking, all they got to do is holler out in the hallway in an office in the cities here, and they're going to be able to say, do you know Jeff Anderson with Summit Mortgage? Does he do 203Ks? They're probably going to be able to get somebody in the office to say, yeah, I did one with him last year. I did one with him this year, and that type of stuff. So there's no doubt it helps when you're submitting offers.
Oh, yeah.
So,
All right. Anything else you want to share before we get out of here?
yeah, we can just kind of circle back to the
Okay.
Minnesota housing and just kind of hit the highlights on that there. Right now they have the deferred loan for $7,500, and that is an interest-free loan for 30 years or when you sell or refinance the house. And that's all based on income. You know, you've got the AMI percentages and stuff like that. They're listed right on Minnesota Housing website. Basically starts at $60,000 and goes up depending on the number of people in your household, kids and dependents.
Can I just jump in real
yeah.
quick? And I know some programs are different and some have changed as far as who in the household counts.
Yep.
Is it whoever is on the mortgage? So, you know, you have a married couple, maybe just the husband or the wife is on the mortgage and the other one isn't. You still count the other one? Do you
If they're
know?
legally married.
Okay.
Okay, and I deal a lot in the Hmong culture, and you know, a lot of households are culturally married, but they're not legally married, so they're filing separate taxes. So now we're only using the income for qualifications of the person that's going to be on the mortgage, on the title, not the cultural significant other. If they're legally married here in the state of Minnesota, then for income purposes, for down payment qualification, we are going to use both people, whether they're on the loan or not. Yes.
Okay. Yep. Sorry to cut you off.
No, that's a great. I mean, we run across that a lot, and so yes, that is how that would work out. So it's basically just going to be the marital status that's going to determine which direction we go. And then the other mortgage with a little bit higher income limits, I think 86 for a 1 to 3 person or 1 to 2 person, and then 99 for above is going to be the monthly payment loan, and that's up to $10,000. And that's going to be at the same rate as your first mortgage. So if you're going FHA, I think they're at 3.625 today with the 1% origination, and then if you're at conventional, 4.125. So it's just going to be a 10-year fixed mortgage on that. And the nice part about it is it's a 10-year. Okay, so it's going to go away obviously faster than the 30 years. So I always encourage people, if you're going to pay extra on your mortgage, just sock it away towards that second mortgage until it goes away. There's no prepayment penalty to pay it off early or anything of that nature there, so they can get rid of that $100 payment. So that helps out in the interim there. So that's got a little bit higher income limitations on that. And then there's the step-up program. So if somebody is coming out of a house they bought years ago and they don't have a ton of equity, but now they're finally in a position to cover their costs, pay off their mortgage without having to short sell and that type of stuff, but now they don't have the down payment for the next one, you have the $10,000 possibility for the step-up buyer as well, where they don't have to be a first-time home buyer. Generally, I think it's 0.1% difference on the rate, so again, not a huge number. But if that $10,000 gets them into the next house because they only have 5 walking away from the one that they just sold and that type of stuff, there is that option available as well.
Another great thing for a seller, right? Because
I know.
when we're working with our sellers and they're looking at their net sheet and they're like, I'm not making any money off of this.
Right.
And part of the problem is they've already emotionally bought that next house with money they sometimes don't have.
Yeah, magically have.
But it's another great resource.
Another
That's
option.
the one.
Yeah. And the step up has the higher income limits, so that's up at the 86 household, 99, 3 plus kids and whatnot in the household there. So it's the higher income limits there. So
Okay.
So that's another good product, like you said, because a lot of people are now finally to that point where they're not upside down and they don't have to worry about a short sale on that townhome that they're looking to sell or whatever the case may be. So it's a good product. And the credit scores on the Minnesota Housing, 660 for the FHA product, 680 for the conventional product to 97%. I think it'll go down to 660 then with a 5% down product there. So, reasonable there. And then the good news with the Minnesota Housing is they also get the reduced mortgage insurance on the conventional products as well, where it's a reduced premium because it's a HFA program. So it's a little bit lesser on the PMI on the conventional products, which is, if you're on that 700 credit score, 680 credit score, it's a big difference. So it really brings it kind of back down into what a 760 credit score would have oftentimes. So
a ton of information.
Ton of information.
You filled about 2 or 3 shows for us. So best way to read your website, phone number, email,
yeah,
anything? The best way to
you bet.
get in touch with you?
Loanswithjeff.com. Can't be any easier. www.loanswithjeff.com. Just you can click apply online. It takes about 3 minutes to fill out a loan application. Secured site, gets emailed directly to me when it's in the system. Generally, you're going to get a call back within 24 hours. If you haven't heard of contact with me in 24 to 48 hours at the most, but 24 hours. Like I tell everybody, I either missed it, didn't get it, or I'm dead.
No.
So,
Well, hopefully not the latter.
yeah. So definitely
kinda
feel
useless.
free to, ping me with an email, cell phone 651-485-0099, text, whatever. So
right.
happy to help.
Yeah, we'd love to have you back. There was a ton, like I said, ton of information. We
Heck
could
yeah.
probably go into each one of these products for a whole show right
Yeah,
there.
no, it's a lot of good stuff, and it's all about getting people in a home and what's the best path, and trying to help out you guys sell some houses.
Yeah. All right, Jeff Anderson with Summit Mortgage. We appreciate you stopping by. And I failed Broadcasting 101 apparently because we're giving away tickets in the show. And if you had any idea what you were doing, you'd say that at the top of the show to keep people here to watch at the back end of the show,
Right.
which I failed to do.
Yeah, you don't want to lead with me.
Yeah.
Lead with the Dickens.
So I'll take blame for that.
We were teasing him on and off on the Facebook.
Okay,
Live,
perfect. Yeah,
but,
so we are giving away Gopher Hockey tickets that
Yes.
we've talked about the last couple of episodes, and we're going to make it happen here today.
Correct.
So those of you that stuck around, we've got a winner.
Yep.
We do a drum roll, but we don't have a drum.
No. So it's Ryan Berentson is the winner of the tickets. So of course we'll be reaching out to Ryan, but there's 2 Gopher tickets, December 3rd. It's a 7 p.m. game at against Ohio State at Mariucci.
Awesome.
So
Congratulations.
yeah, pretty exciting. So we'll contact Ryan here, let him know I got the tickets and how to get them, and go from there. But before we head off, I know Ron had a big event a couple weekends ago. He was in the New York Marathon.
I did. I ran the New York City Marathon actually a week ago Sunday, so it was like 8 days ago or 9 days ago.
Yeah.
Today's the first day I woke up and my knees weren't completely mad at me. So, but no, it was a good event. I'd never done a marathon before. I didn't know we were going to talk about this today either, so that's cool.
Let's see, surprise!
Surprise! Yeah, so I'd never run a marathon. Prior to that, the longest run I had done was the Twin Cities 10 mile, and that was like 4 years ago and 2 kids ago. And then decided that I was going to do this. Ended up to get in, you either have to qualify, which I didn't qualify, or you lottery in, or you join a charity team. And I ended up raising $1,971 for an organization called Cure Search, which raises money for childhood cancer. So that was pretty cool.
Great.
My time, I finished in like 4 hours and 31 minutes, which was about where I wanted to be without knowing how it was going to go. But no, it was really cool. My wife went out there with me, and the event itself is crazy overwhelming. There are 50,000 runners,
Wow.
Other runners out there, and yeah, I'm glad I did it. It's done. My knees don't like me, but I'll be okay.
It's something too. It's very few people can cross it off their list,
Sure.
and it was fun to watch you as you're running.
I did live videos while I was running.
So Ron, being the social media man he was, all of a sudden I say, "Oh, Ron Johnson's live." I'm like, Ron Johnson should be running.
Yeah.
And I see him, and he's holding his phone. And not only was he Facebook Live, he was communicating with people as he's running. I was
Which
like,
might have helped my time if I wasn't doing that, I think, maybe, but who knows?
Yeah.
I wasn't. I think you're not going to win, right? So,
Right.
Like that,
Right.
bad
Why does it
attitude,
matter?
Ron.
Why does it
I was
matter?
kidding. No, so it's an amazing feat, and I think that you should be proud of it. And
Yeah.
it's
It's
really
cool.
exciting that to watch you
Yeah.
go through it now that you're walking fine and you survived. And
Yeah, and I got a ton of support online from people and just people that I met and random people like that. So it was really cool. So yeah, that's it was actually never even on the list to check it off. It was just kind of I turned 40 last month, so I wanted something to do So I decided that would be that would be what I would do instead of like go to Vegas or something.
Yeah.
But no, it was a cool event, and I made it through, and it was a really good experience. So,
Awesome. Congratulations.
yeah. So yeah, I don't recommend running a marathon unless you really, really want to. Have you ever done one? You look like a fit guy.
No.
No,
Not a
not at all.
anything 26 miles I'm driving.
Yeah. So that was pretty cool. That was last Sunday in New York, and now we're back.
Yeah, again, that was pretty awesome, and I know it's a memories you'll never forget.
Yeah. Yep.
Hopefully your knees have forgotten it, and like you said,
They're getting over it. Yeah.
Yeah.
They'll be okay, I think. So
Yeah, it'll be fine.
That's why they have knee replacements, right?
That's right.
Right.
That's right. Come a long way.
Yeah,
Cool.
they have.
All right. Anything else before we head out of here? We've got the tickets, so you'll be in touch.
With Ryan.
Okay.
Yeah. So
And then in the future, we've got Timberwolves tickets.
correct.
Okay.
We got some Timberwolves tickets to give away as well. They're starting to turn around, so the Wolves are
Yes.
getting better, and some exciting stuff going on there. But stick around, and we'll communicate with those tickets as well for
Okay.
future games.
Perfect. And then also, we talked about this a little bit our last show. We're going to change the look and the feel of this show soon. We're going to
Yes.
do some technology things, so we may or may not go away for a while or come back. We'll come back. But yeah, we're
please
going to
do.
change, and what the whole purpose of that is it's really going to change the way that we market our listings. And as far as I know, there's not anybody in the Twin Cities that's going to do exactly what it is that we're doing for people's listings. So that'll be a pretty cool part of this show. So,
I think anybody in general, just some of, not even just real estate. I've been on Facebook on and off here a lot, and the stuff I see in our Facebook Live, it's the general. Someone's holding a cell phone like we're doing right now.
Yep.
But what you've got coming through the pipeline is going to be ridiculously amazing.
hopefully it works.
Knock on wood.
All right. So we'll get
Next
that
time
done.
Jeff's back, we'll get rid of Movember here too.
Yeah.
So.
Oh, well, yeah. Everybody's going to look like a 10 who's going to be on the show. That's basically what we're going to do.
Like, David, have you lost weight? I'm like, sure.
Yeah.
Thank you, Facebook Live.
All right. Perfect. All right. Well, that's the Twin Cities Real Estate Pros podcast. Again, you can check us out on our website at twincitiesrealestatepros.com. We'll have a link to Jeff's information there. We'll have a link to the audio version of the show, the video version of the show, all our social media links. And you can usually check us out live on Facebook on the Imperial Home Team page, YouTube, imperialhometeam.tv, and on SoundCloud, Twin Cities Real Estate Pros podcast. So that'll do it. Once again, David Nelson, licensed real estate agent with Remax Advantage Plus. I'm Ron Johnson, licensed real estate agent with Remax Advantage Plus. We'll catch you next time on the Twin Cities Real Estate Pros podcast.